Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at whether miners are currently capitulating due to the Bitcoin price. To do this, we'll be looking at a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, we're just on the Bitcoin hash rate chart, and as you can see, we've been on a prolonged and substantial uptrend for about a year and a half now. So if we just zoom in into the current price action, we can see since the last Bitcoin price dipped to around $30,000, Bitcoin's hash rate bottomed out, and since then it's been pretty much non-stop to the upside, even though Bitcoin's price action has been pretty bearish and pretty much non-stop downhill for the past year or so. And recently, we've actually seen this trend change fairly substantially and very quickly. So the Bitcoin hash rate just in the past few days has dipped absolutely massively in light of the recent FTX events and their insolvency and the negative reaction that had on Bitcoin's price. We can see the hash rate has dipped substantially as Bitcoin broke from around $20,000 to beneath $16,000. Now, if we go away from the hash rate towards the Powell multiple, we can see this is looking at the daily coin issuance paid to miners in USD. So that is every single day, every single miner, about every 10 minutes, is mining a block, and as a reward for mining the block, they receive Bitcoin in exchange for their resourcefulness to actually secure the Bitcoin network. And we can see, when comparing that daily issuance in USD to the actual yearly average, this is what the Powell multiple is doing. We can see this has dipped substantially very quickly in the most recent few days and weeks. And we can see we're in this green buy zone here, but we have been in and around this buy zone for a few months now. But really recently, substantially, we can see this has dipped absolutely massively just in a very short period of time. Now, what this is suggesting is miners who potentially have been investing a lot into resources, who are very bullish and very hopeful on Bitcoin's price action going forward, maybe were taken a bit by surprise with this very bearish price action we've had recently, and potentially their operational costs are actually outweighing any profits they're actually gaining from securing the Bitcoin network. So if they can't even break even on their operations, potentially they're just having to shut off machines, and this is why we're seeing the hash rate decline fairly substantially. If we then go to the hash ribbons indicator, we can also see just recently we've begun to finally turn over, and the 30-day moving average of the hash rate has crossed beneath the 60-day moving average of the hash rate. And we can see this historically is a very substantial occurrence. This doesn't happen too frequently, but once this does happen, it actually provides a great opportunity to potentially begin accumulating some Bitcoin, because once we get this 30-day cross back above the 60-day once again in the future, this has historically been a great buy signal. The only occurrence in Bitcoin's price history where this hash ribbons buy signal wasn't actually a profitable signal, at least in the short term, was the most recent one, which we saw here as Bitcoin's hash rate increased really substantially, and we saw the hash ribbons give a buy signal. We never really had any positive reaction in price. So as we maybe get into this minor capitulation phase of the cycle once again, and we see the hash rate decline substantially, it may just lead to Bitcoin chopping around and sideways for a few weeks or even a few months. But once we do eventually get a hash ribbons buy signal, it might be worth potentially just scaling in rather than seeing that as an immediate buy signal for a guaranteed return. Obviously, nothing is guaranteed in trading and investing, and especially with the fundamental occurrences, not only in Bitcoin, but in most global investments and across economies around the world. It's a very tentative time where risk management is absolutely crucial. So just to summarize, recent bearish price action has vastly decreased miner profitability. And as a majority of miners rely on selling their mined Bitcoin to fund their operations, many can't even break even now and are having to turn off their machines as a result of this bearish price action. We can also see, due to a prolonged increase in the hash rate, the mining difficulty here has risen drastically and required miners to invest even more to stay competitive. So maybe this flush in miner hash rate is potentially going to even out the playing field, and in the next few months and years, more miners will come in a more decentralized fashion as they try and take advantage of the lowered Bitcoin mining difficulty. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, private trading view scripts, indicator alerts, and more, all for a fraction of the standard industry price. If you want any more clarification on anything we've discussed here today, on the Look Into Bitcoin site, you can actually see on all of the charts we've discussed beneath, there is a little bit more information regarding the calculations of all of them. But if you have any other questions, any other comments, any other thoughts on the current miner capitulation, let me know in the comments down below. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.